Good morning. I am going to talk about, or I'm going to debunk narratives that's been circulating around for many decades. And I have to do it only in 10 minutes. That's faster than any AI you heard of. One of them, I'm not going to have it on the slides. They say that the oil industry or the fossil fuel industry receives $5.5 trillion a year in subsidies. Yes, I said trillions. That came from the IEF, the International Monetary Fund. And how did they calculate those subsidies? They said if we tax globally the whole fossil fuel industry, we collect this much money, but since it's not taxed, therefore it is subsidies. That's how they did calculate that. Anyway, I'm going to get to the point quickly here. The first question that I'm going to answer is, I'm trying to go back here for some reason, it's not going back. Would you mind to see it, sir? The first question is, as you know, last month we had the Israeli-Iran war. And one of the narratives that's being widespread that Iran will close the Hormuz Strait. So the question is, can Iran close the Hormuz Strait? And the answer is no. For some reason, I'm not, here we go. It cannot. First, the strait is very wide. The narrowest point is about 33 kilometers. But this is not the story. Most of the traffic in the Hormuz Strait is in Omani waters, not even in Iran. And you can see on the map there, and the reason why, because the Iranian part of the strait is very shallow, while the depth is on the Omani part. So the only way Iran basically can close it if they occupy part of Oman, and that's not going to happen. But this is not even the story. The story here is that this Hormuz Strait and the whole area is protected by the US Navy, the French Navy, the British Navy, the Indian Navy, the Saudi Navy, and there is a coalition of 34 countries that is based in Bahrain to protect navigation in the whole region. So they cannot. And it's not even in their interest to do so, because 80% of their imports come through the strait. Even things they eat on a daily basis come through the strait, including cooking oil. And all their seaborne oil exports go through the strait. So they cannot close it. Can they cause problems? Yes. But if you look at all the terrorist acts being done in the area, none of them happened in the strait. None. They happened in the Gulf of Oman or in the Gulf, not in the strait. So there was a lot of hype about the ability of Iran to close the strait and what the impact of that. Now, the Iranians since 1980, officially, they threatened to close the strait about 15 times. But never happened because they couldn't. And they cannot, and it's not in their interest. So that's the first one. The second one is regarding the OPEC plus, the OPEC plus decision to increase output. That's the narrative. That is the wrong narrative. Will you go back to the first one? For some reason, it's not flipping with me. So, to the first slide. Okay. Before that. Okay. All right. The narrative is that OPEC Plus increased production. That is absolutely not correct. What happened is, after the oil prices increased substantially after Russia invaded Ukraine, prices declined and inventory started increasing. Global oil demand growth was weak. So OPEC Plus decided to cut production. And they did cut production by 2 million barrels a day. But that was not enough. Later on, they wanted to cut more production. They couldn't agree because the decision is made by consensus. They couldn't agree, so 8 members out of 23 decided to voluntarily cut production by 1.6 million barrels a day. That was not enough. Later on, they had another voluntary cut of 2.2 million barrels a day on the condition that they want to bring it back to the market as soon as possible. So we have OPEC, we have OPEC Plus, and then we have the group of 8 out of OPEC Plus. The group of 8 decided in December to bring back to the market the 2.2 million barrels a day of voluntary cuts. So it's not OPEC Plus. So the media, when they are telling us OPEC Plus did this and OPEC Plus, that's absolutely not correct. It's the group of 8 that decided to bring back this production. And the story was, because they are bringing back the production, then oil prices will decline to the 40s. I'm talking about WTI here. Well, look at the price. It did not decline to the 40s. In fact, it's been going up recently. And if you look at that line to the right, that's the futures curve. It did not. So what happened? Why analysts, especially bank analysts, missed the point? What was going on? That was a big blunder on their part. First, they missed the idea that summer months in the oil-producing countries start in May. And what happened in the summer months in those countries? The demand for cooling increases substantially. And the only way to meet that demand is to burn more oil. So if they increase production, it will be burnt inside those countries. The world is not going to see it. They missed the idea that Hajj, or the pilgrimage in Saudi Arabia, was in May and June, where millions of Muslims basically travel from around the world to Saudi Arabia, where demand for gasoline, diesel, jet fuel, fuel oil, etc., increases substantially during this period. So if they increase production, most of it will be consumed inside. The world is not going to see it. Most importantly, when the group decided to increase production starting on April 1st, they missed the point that most of that oil is already in the market because Kazakhstan and Iraq and Russia have been already cheating. That's why prices did not decline. They missed all those points. There are more to the story because the demand for fuel oil increases substantially in the summer to be burned in power plants. The demand of the oil exporters, for imports of fuel oil increases substantially. And for those who are interested, I'll be happy to email you the charts to show that. So the narrative was oil prices will decline on this increase. It did not. This was released today. So this morning, OPEC released its numbers. And the numbers prove the story and what I've been telling you. If you look at OPEC production, it increased in June by 349,000 barrels a day. That sounds scary, but prices went up today. Of course, they've been going up and down, but by the time I walked to this room, it was up. Despite this increase. Why? Because the announced increase in production ceiling was 960,000 barrels a day. If you compare the production between March and the end of June, the actual increase is only 552. You can see it in red on top. 552, while the announced was 960. If you look at exports, and that's what the global oil market saw, it's only 442 out of the 960. So there was no reason to be bearish. There was no reason for oil prices to decline. Then there was a narrative from Bloomberg and others talking about the Saudis exceeding their quota in June. Well, let's remember what happened in June. We have the Israeli-Iranian war and the possibility of problems in the region. So what the Saudis basically did, that they increased production and they shipped that production to safe areas. And that's why they increased production. That oil, or the world did not see that oil. That oil is still in storage. It just, they moved it from underground to above ground. All right. Global energy, every single outlook in the world predicts that global energy demand, energy, that's all sources of energy, is going up and will continue to go up. We have several reasons why it's going up. I'm going to go over those quickly. Artificial intelligence, autonomous vehicles, urbanization. Just to mention urbanization, basically, it's not the population growth that increases energy demand. It's not. We hear it all the time. That's another narrative. It has nothing to do with population growth. It's really urbanization when people move from the countryside to the cities. That increases energy demand significantly. Between now and 2030, every year, we are going to have about 100 million people moving to the cities worldwide. 100 million. And then we have migration. And for those who attended the previous sessions several months ago, you might remember the story that I mentioned. When President Biden withdrew the troops from Afghanistan, they brought with them tens of thousands of Afghan families. The moment they put them in apartments in the United States, their energy consumption increased by about, listen to this, 70-fold. Yes, not 70%, 70-fold. Those migrants from Africa through the Mediterranean to Europe, once they land in Europe, their energy consumption increases by about 30 to 40-fold. The immigrants on the southern border here in the United States, the moment they walk to the United States, a 30 to 40-fold increase. So migration has a very important impact. And just to think about it, for the EU, for example, every year we are talking about millions of people. We are not talking about a small number of people. But here is my favorite one. Rising incomes. It's not about really incomes as much as the point that I'm going to mention in a minute. When people's income increases, let's say double, you are not going to see that person eating double just because the income increased. You are not going to see them wearing two shirts over each other just because their income increased. They are going to spend the increase on comfort, on entertainment. Why this is important? Because we have evidence from around the world that the moment the income increases above certain threshold, that income goes to air conditioning. And air conditioning is energy intensive. All you got to do, just look at India and China and Mexico to find out the massive increase in electricity consumption because of air conditioning. So we have all those things increasing energy demand globally at a very high rate. So why I'm mentioning this? Because we have a narrative that we need to debunk. The whole climate change policies ideas are based on the idea that they need to replace coal and natural gas by solar and wind. But with this increase, which is way higher than the use of solar and wind, that replacement is not going to happen. And therefore, we go back to Dan's point about why you need to invest in oil and gas. Gas is here to stay. Oil is here to stay. Coal is here to stay. But this is really not the story about for them to stay. Their growth is here to stay. And that's where the money making is, with their growth. So what are the implications? No peak oil demand. No peak in coal demand. No peak in natural gas consumption. That's what that means. These are the implications of such increase in energy consumption. And if you look at the narrative right now by the oil industry, even if you look at OPEC, and I will talk about that in a few minutes, the narrative is very clear. They are not against solar, they are not against wind, they are not against electric vehicles. In fact, if you look at one of the top countries in growth in solar and wind today, Saudi Arabia. Okay, so the point here is, what about that idea, the narrative of peak oil demand? The first narrative that we hear about is, if we increase the capacity of solar and wind, then we can lower our dependence on oil. Nonsense. Why? Because solar and wind is used to generate electricity. We rarely used oil to generate electricity. This is worldwide. Only 3.7% of global oil demand is used in power generation, mostly in oil-producing countries and faraway islands. And some people might say, well, what about China? What about India? Those are the reason. Well, here, look. This is OECD. This is Europe. This is the United States. Only 2.5% of oil demand is used in power generation in those countries. But again, what about China? What about India? I want you to look at this chart and find the orange line. There is none. China does not use oil in power generation. So even if they double, triple, quadruple their solar and wind, has no impact on the oil demand. Look at India. Similar story. No impact. So the narrative that we hear basically is absolutely incorrect. Now, on EVs, and I'll try to cut it short here, we have several issues with EVs. When you talk about electric vehicles, we have no problem with the numbers. They talk about sales. They tell us about sales of this increased by this much. But when it comes to oil demand, this is not the issue. The issue is, tell me how many cars are on the road. I don't care about sales. I'm going to tell you why I don't care about sales. Right now, in the world, we have about 50 million electric vehicles of all types. Their impact on oil demand, the replacement, and that is the direct replacement, is only 1.3 million barrels a day. That's it. You can see where the exaggeration and the narrative is. Our oil demand today is 104 million. And the impact of all the hype, despite spending trillions of dollars in the last 15 years, is only 1.3 million. But this is, I'm going to skip this just for the sake of time. Half of those, more than half, basically 30 million of those cars are in China. Again, 50 million in the world, about 30 million in China. But that 30 million that we are assuming it's reducing oil demand in China is questionable. Why it is questionable? Because it turns out that the government of China gives subsidies to any car that is produced within China and sold within China. I'm talking about EVs. And the idea here is, because they need to set up some sort of conditions how to get the subsidies. They said, well, it has to be a new car and the mileage has to be 0. And people immediately found out, if I bring an old vehicle that is 10 years old and bring that mileage back to 0, it's new. and therefore I can't get subsidies. So they've been selling those old cars several times. That's how we ended up with the 30 million in China. Not only that, the subsidies are only for cars sold in China. So how they play the game? They play the game this way. I manufacture the car, I sell it to him right now, he will take it, he will get the license plate for it in 5 minutes, and 10 minutes later it's going to a ship to Nigeria or any other country. It's been counted twice. Twice. One inside China, one as exports. Yet, they tell me that oil demand is going to decline. Well, we already have the numbers. Why it did not decline? Because of all those scams that's been going on. Okay. On the long-term outlook, this is from OPEC last week. This was released in Vienna. And they see oil demand between now and 2050 increasing by 20 million barrels a day. This is the increase. This is the increase. Now, by 2050, I will have 123 million barrels a day. Here is the problem. Most of that oil does not exist by that time because of the declines. I need about at least 70, 80 million barrels of oil, of fresh oil, just to compensate for the decline to keep production flat, let alone meet that demand. OPEC estimates that, listen to this number, they estimate that we need, between now and 2050, 25 years, I need $18 trillion of investment just in oil, just to meet that demand. 18 trillion. Even if it's 123, 100, or even 75, it doesn't matter, because even if oil demand declines to 75, most of it does not exist today. I still need to invest no matter what. And I will end with this slide that some of you have seen before. There are two scenarios, and again, this is my last slide. These are two scenarios. There is a red line, that's oil demand, and a green line. To keep oil demand by 2040, the same oil demand that we had in 2019 at 100 million, I need 600 million electric vehicles. $600 million electric vehicles by 2040. In 15 years, I'm supposed to have 600 million. How many I have? Assuming that China's numbers are correct, I have only 50. I have only 50. After trillions of dollars of investment, after a revolution in electric vehicles, after 15 years, I have only 50 million, and they expect us in the next 15 years to jump from 50 to 600 million. What that tells you is oil demand is going to grow no matter what. And if you look at the other scenario, the red line, that's assuming that we will have 240 million. So yes, it's five-fold increase. But don't be fooled by the five-fold increase. And the reason why, because many of the cars that exist today will not exist 10 years from now. So I need about 7 to 8-fold the number to get there. There is no way I can get there, but assume we get there, oil demand will grow to 112 million. We are at 104 today. So any way you look at it, oil demand is going to grow. We are bullish on natural gas outside the United States. We are bullish on LNG. There is a long story, a big story about LNG. LNG is the future. They say that natural gas is a bridge to the future. No, it's not a bridge to the future. It is the future. Thank you.
We definitely have time for questions. Phone and.
Would you mind put the last page? I don't know why it did not work with.
Is that working over? Oh, perfect. Okay. No, okay. Well, I'll walk over. We've got this gentleman over here. Let's see if we can get him. I can amplify your question if we need to while we see if the other mic.
I noticed you're not bullish on natural gas producers in the United States.
Yes.
And then, so how does an investor invest in, well, like fertilizers? There's other ways to use the cheap gas in the U.S. for export, right? Well, what are those other?
Yes. So the reason why, I mean, if you look at the returns, when you look at LNG, for example, versus U.S. natural gas, the return on LNG is way, way higher. The LNG companies within the United States, the return is higher than natural gas. And the reason why, because the resource is so abundant and the technology is so advanced and the experience is so good that we can bring it to the market in few weeks. So anytime we have like even 10 cents profit, we can bring it to the market. So that's why I'm not that bullish on natural gas within the United States. But since it is very cheap, it is creating opportunities all over. Of course, the biggest opportunity is LNG. And that's the easiest one too. In terms of fertilizers and other things, of course, they get the lower gas price. Our problem right now is the tariffs. We don't know how this is going to work out, how it's going to unfold in the coming years. It is very clear that some investors basically are just shying away from the main markets and going to places where kind of unknown places. But I'm glad you mentioned natural gas because I want to mention another issue related to the Israeli-Iranian war. The biggest story in energy during the war between Israel and Iran was not Iran, was not Israel, was not oil. The biggest story was natural gas. And the reason why, because Egypt and Jordan depends heavily on Israeli gas, and Israel was afraid that Iran will hit its largest gas field, so they shut it down. And Egypt and Jordan ended up in a major energy crisis, and they suffered greatly during those days. And that's why when we talked about earlier about Saudi Arabia exceeding their quota, one of the problems we ended up with, Saudi Arabia was sending diesel to be burnt in the power plants in Egypt. On the other side, Iran reduced its gas exports to Iraq substantially. So Iraq suffered, and Iraq is still suffering until today, and they are burning fuel oil. So the idea here is, any way you look at it, everyone is after that gas, any way you look at it. When we look at LNG, Iraq, one of the largest oil producers in the world, will start importing LNG at the end of the year. Kuwait is tripling its LNG imports, although Kuwait is one of the largest oil producers in the world. Egypt was an LNG exporter, and now it's doubling its LNG imports. And the technology advanced so much right now that anyone who wants gas anywhere, we can deliver it right now. Ukraine, for example, is, listen to this, Ukraine, on the other side of the world, is importing US LNG through Greece.
Any other questions? One moment.
What is your take on what is your take on abiotic oil as proposed in the book The Deep Hot Biosphere?
On what, sorry?
Abiotic oil, or Earth generate its own oil instead of fossil fuel.
My knowledge of this is kind of very weak on this one, so sorry.
Okay.
I would love your insights on the fact that, I mean, if you look at whether it be Virginia or Louisiana or West Texas or East Texas or Virginia or you name the place, the amount of AI build out, millions, tens of millions of new AI chips coming online for the compute we need. And look what Elon's doing in Memphis, right? How do you power that whole thing? 250,000 chips going to 1 million chips, then 2 million in 5 years. He built his own LNG facility, right? And they can bring those online in 6 to 12 months, right? So the next couple years with the spike of AI in the U.S. and globally, the power needed that's got to come online right away. What I don't understand is how the market doesn't see the need and the spike. I mean, companies like Total and Cheniere, et cetera, are going to blow up the next couple of years. Great for investors. Why aren't people seeing that? I just think the market's not following the investment in LNG as fast as it should be, given the massive spike in demand and our current lack of supply for the increased demand. I would love you to drill down, no pun intended.
I'm going to tell you the other side I'm going to be the devil's advocate here. Sure. What we fear in this case is that there will be a clash between the AI companies and the people and politicians on the other side. And the reason why, because instead of the companies, I mean, we heard earlier today about Google and Amazon and all those companies, instead of them going and building their own power plants and building their nuclear plants or SMRs, they are going and locking contracts with companies that provide us with electricity. And the fear is there will be a time when we have a shortage and it will be the companies versus us. And we can call our senators basically and complain. And that's where the clash is going to happen. And President Trump right now is talking about trying to help out those companies. That will be a great idea if they build their own power plants and leave the other plants for us. So the other side of the story is we might see a backlash against those companies that will slow them down because there is not enough power coming up online because of this. The other thing is, yes, nuclear is going to solve this, but because of the multi-layers of regulations, it will be a long time until we get them. The only fuel that will help during this period is natural gas.
Thank you. We do have time for one more question. Anybody?
Oh, thanks. Hi, right there. What companies would you suggest we invest in for LNG?
I would be happy to talk to you about the names. I usually, in public places, I don't like to mention the companies, but I'll be happy to talk to you privately after we finish today. Thank you.